Hello, this is Patrick White from AA Commodities and Investments of Spencer, Iowa with your Sunday night, August 25th market recap video. As you can see, we've got corn up fractionally here. We're up a half a cent on December at 368 and a quarter. November soybeans are up 4 3/4 at 861 and a quarter. And December Chicago wheat is down 2 at 475 and 3/4. I'm going to go ahead and get it started with a disclaimer. Just remember there's significant risk in trading futures and options. If you'd like to read the full disclaimer, please pause the video now. All right, so jumping on into the charts here. Starting off with the corn market here. We get the December corn chart up here on Friday. Ended up having a pretty poor day in the corn market as it was announced that China is going to put on some retaliatory tariffs for U.S. corn, soybeans, and wheat. There's an additional tariff put on for corn and wheat at 10%. Although it really doesn't matter a whole lot because, number one, China has a ban on importing agricultural goods from the U.S. and, they don't really purchase that many, that much corn from the U.S. besides just token amounts every year. So there's really not, a whole lot of demand destruction there. The reason why the market sold off, I guess, in my viewpoint, was that, it just signifies that, the trade war is, just further and further away from getting resolved here. So just bad news for the market there on the trade front. And that's why we're going to be talking about mostly lower markets here today. So, like I said, though, we tested lower, went down to. And we closed down 3 1/4 cents here. We had the low of 365 and a half, and really the market was just trying to test and probe down to this 363 and 3/4 level. They kept that intact for what it's worth. That's a decently good sign, but still not real strong signs of a turnaround here at this point yet. Could happen this week, but I would look for right now just a trading range to develop between like 381 and this 363 and 3/4 level. And, if we break this 363 and 3/4 level, we're probably headed down to the low 350s, but we'll cross that bridge when we get there. With that being said, though, I think that, rallies are probably going to be capped at this 381 level. If we do have a bullish catalyst and we can get back up there, I think this 393 gap level there, 392 and 3/4 in December on up to like the $4 to 401 mark would be pretty good resistance in December corn. So on into soybeans here. Really poor day on Friday with the announcements of the additional 5% Chinese tariff. That brings our tariff rate up to about 30% on soybeans. So we lost 12 1/4 cents here. We broke the 865 support level, and we went down to the 855 support level. And if you remember, that was the low from August 5th there at 855. And we're off that pretty solidly here on the overnight. Meal is higher, and oil is lightly higher here as well. As far as like the intraday charts go, here's the hourly chart on soybeans. We've got some pretty good resistance at this 865 to 867, 868 level. Kind of looking at those two bottoms there and these two bottoms up here. So, pretty, decent recovery here so far on the overnight, which is nice to see, but, certainly not an indication of a reversal at all. The trend is certainly still lower here. And, with that being said, I think that, it'll be interesting to see if we find sellers at the 865 to 867 level. If we do break below here, I expect a break down to 845. As far as a recovery goes, I would look for, if 865 to 867 breaks, I'd look for them to go back to this 880 mark. And that's a level they touched off of 3 times and couldn't get above this last time. So going on into the wheat market here, we saw some decent short covering, and it looked like a pretty decent day. We had wheat on Friday. It was down, as much as about 6 cents, and then it closed, 6 cents higher. So, pretty decent reversal day. We did put in a lower low than this, this previous day on the 22nd there on Thursday, and got a nice close near the highs. With that being said, though, we are still in an overarching bearish trend for the wheat contract. And, I think that, the mid 480s, 481 to 485 or so, I guess I've got 483 pegged here. I think that's going to be some pretty decent resistance for the wheat market. If we do break above there, we'll probably go up and challenge this 495 to $5 zone. And, we'll just have to wait and see what the wheat traders want to do. I guess, for what it's worth, the KC and Minneapolis charts don't look, nearly as bullish as the Chicago chart. We are a little bit lower here on the overnight. We're down 1 1/4 currently at 476 and a half. But with that being said, we've got a little bit of a positive, a little bit of positive price action here from Friday that we're keying off of. So, I think that if we do break down, they're probably going to break down below this 465 level and head down, test like 453, 455. And I think near term they're probably going to test this 483, 485 level, and I think that's where you're going to see your battle is in there. So. Going on into I'll go into the cotton market here real quick. Really still inside of the range here between the $60 mark and $58 mark, $57.75 or so. Market really obviously did not like the Chinese tariff news and just just a further breakdown of relations between the U.S. and China on trade. And also another big factor is that the Texas Panhandle has been getting about 1 to 2, 1 to 3 inches of rain here in the last 3 days. So cotton, good to excellent ratings and things like that should improve for Texas. They've been struggling here this year just on their non-irrigated ground, and just the rains definitely helped them out. I don't know if it was a complete drought buster, but certainly helpful there. And that coupled with the Chinese news had them trading significantly lower here on Friday. So I would look, if we are to break the 57.75 level, we'll probably have a further slide down to 56 to 55. I think that 55 mark would be pretty psychological there. And even if you take it out to like a weekly chart, I mean, geez, we're in areas that we haven't been in a very long time here. Maybe down to that $56 mark. I guess we do have a reference point there, but at $56, we'd be at the lowest point we've been since March 11th of 2016. So certainly not what you want to see on the cotton chart there. Live cattle here, they went up and tested the 101 range. Obviously, with the tariff, the tariff news and just the breakdown at Hogs, ended up closing $1.70 lower here in October. Live cattle just saw resistance and saw selling right at that 101 mark, but it was nice that they kept that $98 mark intact. So I think that's where your battle is going to be at this week. If we break below that $98 mark, we're probably headed down to 96. But just after this free fall and stuff a couple weeks ago from the Tyson plant fire, it is nice to see this thing, at least start to form some sort of a trading range here between 101 and 98. October hogs here, kind of an interesting chart, one of my favorites. We had a nice range set up here between $68.70 and like the $62 mark, and even saw some support here in at like $64.50. Ended up, when we lost that $64.50, that was kind of the tell there. The market rallied back, and found more sellers at the $64.50 to $65 mark, and went down to on Thursday night and tested that $62 mark, closed there, and the announcement of the Chinese tariffs, got hogs to gap open lower. And, they ended up closing down $3, the full $3 limit there. And if you'll notice where they gapped to, they opened at 61.57, I believe it was. Yep. So, yep. And the market tends to gap right around support and resistance levels. So it just gapped down below that support level between 62 and 61.50 and just sold off from there. So I think we might find some support here at the $58 mark. It'll be interesting to see this week, how the traders take the news, and if they want to drive this thing down, even further. Just without exports, this market seems to be, pretty easy to sell. But with that being said, though, too, we've got historically, like if you look at a weekly chart, there is some, pretty solid support levels in there, like, the low 50s, low to mid 50s, call it. So, historically, we have bounced from the low to mid 50s area in hogs before. So, not too far away from that. So that's about all I got here for you guys. Feel free, if you have any questions, give me a call, 712-262-7606, or you can visit our website here at aa-commodities.com. Thanks for watching. Appreciate it.